Hello, and welcome to the first episode of the Bitcoin in Asia podcast. I am John Riggins with BTC Media, and our guest for this inaugural episode is Jack Huang, founder and managing partner at One Block Capital out of Hong Kong. Jack is a Bitcoiner and really a good example of how much of the current investor class in Asia entered this market. His experience includes a background in traditional finance at places like Rothschild and the World Bank, and a commercial entry into the Bitcoin world during the ICO boom, which I think is actually an important perspective to get, because it's such a common story, especially here. We talk about how early Bitcoiners in Asia entered as users with a different frame of reference than many in the West, his experience focused on developing markets in Asia at the World Bank, how his thinking on an investment thesis for Bitcoin has evolved, and the Bitcoin businesses and strategies that are working in Asia today. I hope you'll listen and enjoy. Jack, great to have you on today. Welcome to the show.
Thanks, John. How's it going?
Pretty well over here. I think we'd usually be doing this in person, but you're in Shandong this week with a little family reunion. So, how's it being back in the mainland?
Yeah, it's a nice little trip. Nice third tier city on the coast of northern China.
Nice. And third tier city, what's the actual population?
Well, it's probably over 7-8 million. But still, it's third tier by China standards. That's for sure.
Yep. So third tier by China standards, still bigger than probably the third biggest city in America. Well, cool.
Yeah, pretty much.
Really interested to talk to you. Your background of kind of working with traditional finance and getting into crypto. Something that we want to kind of go through. So I think to start out, though, I want to get your current honest Bitcoin pitch assessment, 30-second elevator conversation with someone who is interested in the topic. What are you telling someone about Bitcoin today?
Very basic gist of it is that as a society, we need a store of value. And that's for most of history, that's been either gold, silver, another commodity, or any sort of other monetary instrument that society believes has value. And as it turns out, Bitcoin is probably thus far the best designed and most efficient method of storing value. And that's to say that it basically a better version of gold, which at the moment, I think total market capitalization of gold is somewhere north of $10 trillion. And so as sort of digital gold, which is what everyone likes to call Bitcoin, it is really just more efficient, and it is well positioned to take at least a portion of that massive capitalization.
All right, I like it. And on the heels of a nice, probably 20% drawdown in the last little bit. So glad to see your thesis isn't getting too negative today. So take us back a little bit to kind of your first career. You worked with some bigger institutions on kind of the global financial stage, World Bank. Can you take us back there and kind of give us a sense of your impression of how, well, maybe just a little bit about what you were doing when you were there, and then kind of get into how you see them thinking about Bitcoin then versus today.
Sure. I mean, I guess to give you a little bit of context, I came out as a fairly traditional finance guy. So I basically started my career actually at Rothschild, the British investment bank, and worked at a couple places before joining the World Bank. I think about 5 years ago. Really, what sort of got me really interested in crypto was actually something that, looking back now, it seems like a pretty good introduction to the flaws of kind of the existing financial system. So my first job at Rothschild, we basically had like a 2-month training at their headquarters in London, which has been there for about 150, 200 years.
Yeah, so one of the iconic names in finance for sure.
Yeah, definitely, yeah, for sure. What was actually quite interesting was that for the month of training, every single day when we walked into the building, we passed by this small room where for I think about 100 years, 5 or 6 bankers from the city of London sat down every morning to fix the price of gold.
Yeah.
Uh, this was something that was, being done until just a few years ago. I mean, they were still having conference calls every single morning. Barclays, Goldman Sachs, and a few other banks, and that's what happens every single morning to set the price of a financial instrument which is recognized by just about every single person on earth, right? So if you think about it, it's quite ludicrous. It just doesn't bode well for the people that are not outside of that, or not inside that room.
Mm-hmm.
I did the traditional kind of investment banking route for a few years, and then joined another organization which is also very much at the establishment level of the financial world, which is the World Bank. And it's very much very similar in terms of the mindset, which is that the people that are working at these banks and the people that are making the money at these banks, they're more interested about preserving the existing system, which has worked well for them. And the World Bank, nominally, it's a non-profit organization. It's an international organization under sort of the edifice of the UN. But at the end of the day, their main interests were very much ensuring the stability of the existing economic and financial system, which is to say that, allow multinationals and corporates to maximize their profits. And a lot of, what we did, nominally supposed to be, promoting development in poor countries, which turns out to be more of a, expanding businesses in poor countries for companies in rich countries.
Mm-hmm.
So then, when I became interested in Bitcoin and crypto in general, it seemed like sort of actually the antithesis of what I was really doing during my day job. So
Mm-hmm.
I grew, quite dissatisfied, and just started thinking about, what I was doing, whether it was actually adding any value to, the broader economy, and as opposed to just the people at the top who had more control over the economy than the other people.
Mm-hmm.
And that's how I eventually pivoted into crypto back in 2016, not too long ago. As Bitcoin really became something in the public consciousness, and as sort of at the very beginning of the tokenization craze, which led to sort of the ICO bubble of 2017 and 18.
Yeah. So back to that room, fixing the price of gold every morning at Rothschild. So when you're there and you're seeing this, you're hearing people kind of discuss it at that point. It's just kind of conventional. It's just kind of understood that's how it's done, and there's no one questioning it. There's no one saying, "Hey, this seems a bit strange." Especially from someone who's kind of from the generation that's kind of entering this world crypto native, and you see Bitcoin traded 24/7 on open markets. What led to the change, I guess, from that kind of one room and to a couple of years ago when they moved away from that? Was it kind of people internally saying, "Hey, this needs to be a different system"? Was it pressure from someplace? What led to the change there?
Yeah, I mean, I think like the one room model obviously drew a lot of conspiracy theories. First of all. So I assume there's a good component of that when they decided that this was probably not a great look for the global financial
after
industry.
the Libra scandal too.
Yeah, of course. I mean, LIBOR as well. I mean, that's the other insane part. How do you get these five to 10 banks, setting the price of an index that's basically literally has effects on every single person who has an outstanding loan, pretty much. Mm-hmm. It's pretty ludicrous if you just take a step back, basically.
Yeah.
I mean, and I guess for for the bankers themselves, I mean, basically there's no motivation there to do anything other than maximize, what they can make out of it, right? It's people like to say, Bitcoin is manipulated, and that's one of the big reasons it's not getting a ETF in the US, for example. But I mean, it's just, I mean, this is entirely different level of manipulation.
Right. Bitcoin just isn't manipulated by the right set of people. It's essentially what it is. So you make it to the World Bank. What were you working on there initially during your time?
Yeah, I mean, I was doing basically their bread and butter, which is financing infrastructure projects in emerging markets / poor countries.
Yeah. So bonds to emerging markets, and you're kind of seeing in that the people who are benefiting are these multinational corporations that want these emerging markets to be able to pay for their services, essentially.
Yeah, very much. Just an example. My previous role, we had quite a lot of business with one of the main power companies in the Philippines, for example, which, if you know, sort of that region of the world, most of the economy in the Philippines, for example, are controlled by just a few families. You can count them basically with one hand. So then as if your mandate is to finance private projects and companies within a certain economy, the Philippines, then you kind of have to basically put your money where those families are. So, I mean, that's the irony, right? So if your mission is to actually, provide financing for poor people, it doesn't really make sense that you're literally actually financing some of the richest people in the world because it's a poor country, but, controlled by very few people.
Yeah.
So that was, that was sort of one of the things. So we financed power plants and, like water supply and all sorts of infrastructure projects in that region.
And then all USD denominated, by the way, right?
Yeah, of course. All LIBOR plus.
In the face of these Facebook Libra hearings this week, what can you kind of give us a sense of how kind of U.S. centric the U.S. denominated, but how kind of U.S. run this World Bank system is?
It's pretty funny just hearing Zuckerberg speak. Just, I can't remember, maybe like 2 years ago, he was in Beijing and he was, everyone's heard the story of how he went jogging in front of Tiananmen Square. And basically when the air quality index was 200 plus, which means it's extremely hazardous. And I assume he did that because he wanted to look good in front of the Chinese cameras. Right. And of course, his office, there was a
conspicuous sitting next to it.
Xi Jinping.
Right next to his notes there. Yeah.
So that's that was the Zuckerberg of 2 years ago, and all of a sudden, during the hearing, he ends up becoming the American business champion, and a key sort of key role as America's sort of champion against the Chinese corporates. So it's just an interesting shift in attitude, which is interesting because it actually is the case where Libra does sort of have some parallels to what the Chinese is trying to do in terms of their own state-backed blockchain. So there's some truth there in terms of if America doesn't come out with its own sort of semi-state-backed blockchain like Libra, then the PBOC, the People's Bank of China, will have the lead and sort of impose its own solution around the world.
Do you really see the kind of aspect of it being some kind of blockchain underlying aspect to it? Do you really see it as being an advantage for China versus just kind of the digitization of fiat currencies today?
Yeah, I mean, at the end of the day, I mean, it's if you're talking about People's Bank of China blockchain, it is not going to be decentralized, right? Maybe it'll have nodes, but its nodes will be run by the party committee of Beijing and the party committee of Shenzhen, et cetera, et cetera. It's not going to be what sort of people in the Bitcoin world would imagine a blockchain would look like.
Of course. Is it fair to say China's more interested in challenging kind of the U.S. dollar reserve status, or at least adding the RMB to kind of a bucket that's considered there, versus, hey, let's actually have something that's decentralized and disrupts the U.S.'s kind of legacy system that way?
Yeah, well, I mean, first of all, I think that the PBOC blockchain, the Chinese blockchain, is more so targeted at sort of China's own population, right?
Mm-hmm.
So, I mean, it's a dystopian dream to be able to, monitor every single transaction that, comes out of any of your citizens' wallets, essentially. And the blockchain itself is, I think, more meant to reassure the population and make it sound a little bit more
interesting,
palatable. I mean, it's easier to say that the digital RMB is run on a blockchain than to say that digital RMB is basically the central bank on a central bank ledger that monitors every single one of your transactions.
Right. My understanding of the current kind of infrastructure isn't super clear, but this is all happening already with maybe it's somewhat siloed, but I think even all these kind of Alipay, Union Pay, all these different payment platforms feed into a central bank kind of ledger somehow today, right? And this is just to frame it a little bit more interestingly.
Yeah, I mean, on the back end, obviously, all of the existing payment solutions in China are all plugged into the central bank and fully monitorable. So then a digital RMB
kind of to Zuckerberg's point about if we don't think about our U.S. companies, that's what we're up against essentially, from his perspective and before Congress. From Zuckerberg's perspective, I mean, if some sort of Chinese-led digital ledger gets adoption outside of China, in some of the emerging economies, essentially, before the Zuckerberg's Libra coin gets in those people's hands, then of course, then China can exert more of its influence and also be able to control the monetary systems of those people a bit more than America can. Mm-hmm.
Which is also sort of raises the question: then is he saying that that Facebook / Libra is going to be in some way working hand in hand with the U.S. government? Is that what he's sort of promising the congressional committee there? So then it's I would just say that it is true. Libra and sort of digital RMB are almost two sides of the same coin in some ways.
Yeah, all this to point to the fact that Bitcoin really is a separate thing here. While at the World Bank, that's you're there kind of during maybe kind of the first Bitcoin bubble, 2013-14, and then a little bit of a bear market. What were people talking about Bitcoin internally there? Was there were there any factions of people within your circle who were kind of thinking similar to you of, hey, this kind of dollar system that we're helping propagate is not the most fair thing. What is this Bitcoin thing? Could this be interesting? Any talk of it when you were inside?
No, well, not, I mean, it was very much like a curiosity, right? I
Mm-hmm.
mean, ev- I think pretty much by 2015, 2016, well, 2015, I'd say everyone in sort of the banking world has at least heard of Bitcoin. So, you'd have, lunch chats about how, oh, did you see this, article about this Bitcoin thing? It's like a future of money. But it was sort of seen more in the same lens of other sort of payment solutions. For example, like PayPal, or just some sort of, weird new payment thing. I don't think people sort of realized how attractive the centralization part of it is until sort of we had in the last 5 years all this QE, and just the fact that all these economies went to negative interest rates,
Mm-hmm.
and you sort of begin to see the effects of QE in terms of the various asset bubbles that popped up everywhere in the world.
Mm-hmm.
From housing to art to luxury watches and all this sort of thing. And then sort of you have a fraction of bankers who were generally interested, but more as sort of a investment case, just a sort of a side investment
Right.
from their day job. And then you had others who were convinced enough to quit and start doing something in this sector.
There we go.
Yeah, but I mean, I'd say for the most part, it's just more of a curiosity for people.
Sure. Yeah, sure. Slowly and then all at once. And so kind of your last point there, you're an example of that. So you are, maybe a little bit jaded by what you're kind of seeing inside, and then also becoming more interested in what's happening in I guess we'll say the crypto world there, because let's start getting into that though. So your first interest, is it Bitcoin that brings you into this, or do you start seeing, hey, people are making money on these, what you're thinking of then, these crypto investments? Take us through your leaving the World Bank and starting your own kind of venture.
After I left the World Bank, I was working at a sort of private equity / family office for about a year and a half. And it was actually there when
your Moscow trips.
I worked, let's just say various oligarchs. But yeah, I mean, so we were, basically we're investing, funds for very rich people, which actually brought a bit of flexibility because they were pretty much interested in investing in anything.
Mm-hmm.
So on the side, I was interested in Bitcoin, but actually, we were also looking at various things like blockchain businesses, which I started becoming a thing back in 2016. One of the original companies we looked at was a fintech payment processor in Southeast East Asia. When we wanted to actually invest equity as just as a fund, we found out that they were actually considering raising money in tokens instead.
Mm.
That was actually a company called Omise Go, or Omise, which
OMG.
eventually OMG, yeah. So they eventually launched one of the biggest or earliest large scale ICOs back in, I think, early 2017.
Yeah, one of the more largely successful shitcoin public sales in Asia there. Interesting.
Yeah, they got Vitalik as an advisor, and
there's the juicy stuff.
Took off from that.
That's the stuff they don't talk about on Twitter anymore. Okay, interesting. And so you're seeing this happen. You're like, hey, wow. And part of it is, to be fair, are you looking at this and saying, hey, maybe this is kind of a novel thing. If these groups can raise money publicly in a way that's more decentralized and less regulated, that kind of it goes against kind of the model that you're seeing in the traditional world that's already corrupt as it is. How are you thinking about that fundraise in terms of like how disruptive it can be at that point?
Sure. I mean, it was but basically by the beginning of 17, there were already several 8-figure ICOs that had already taken place, including sort of the DAO from even further back.
Okay.
But so at that point, it's sort of on people's radars, even in finance, that this was potentially a new way of financing. Right? So you're not even it's very attractive. You're not selling equity, and you're not promising any repayment. Right? So so if you're looking at it purely from a investment perspective or from a financial perspective, it's extremely low cost of capital, essentially, compared to the existing ways of raising money. And that was, of course, a side interest. I mean, while I was still working on my previous fund, I think so there's a couple of components there. One is that it is very interesting as sort of a brand new model of raising money that doesn't involve the bankers. The other component is that it was a bit more opportunistic, because up to that point, pretty much, if you look at all the global markets, there's asset bubbles in pretty much every single new asset. That's been the case for basically the past 5 years since sort of QE started.
And you're sitting pretty much in the catbird seat of this, of Hong Kong. You've got real estate market, luxury goods, kind of the probably the best example of where that's happening.
It's more or less just a flood of money from all the central banks massively printing cash, and they have to go somewhere, right? So it's basically there's a bubble in every single speculative asset there is, and I think at that point there was not anything more speculative than Bitcoin and sort of the later ICO tokens.
Late 2016, early 2017, it really does start to get moving there. And so and then at that point you decide to kind of go out on your own, launch a fund.
Yeah. So basically we started out just a few friends. We basically started out as a syndicate of where we would pool our capital, and at that point, the ICO stuff isn't what we have today, which is that back then, as long as you can fire up a node on Ethereum, you can get into every single ICO there is. It was a very unsophisticated market, and believe it or not, everything was actually run on smart contracts, right? Instead of the multiple rounds of pre-sales and private sales that ICO new token projects do today. Basically, more or less for everything up to mid 2017 or late 2017, anyone in the world could have just fired up a parity node and just try to jam as much ETH as possible into those smart contracts to get the tokens.
Pay some nice transaction fees, get ahead of the line.
Just max out your gas, basically. So that was a lot. So it was a lot more interesting to invest in ICOs back then. I'd say, and the other thing was, back during that period of time, obviously you had a lot of hardcore Bitcoin people who wouldn't look at any sort of shit coins at all. But then there were a lot of people who were actually quite inspired by people like Nick Szabo with sort of the whole use case of smart contracts, right? And even though what we now see as sort of shitcoins and all these ICO shitcoin projects popped up, back then, like a lot of people, including myself, thought there was a lot of promise, right? What if you can have this decentralized Uber, or like you have a decentralized Airbnb, and basically this whole Web3 stack, right? And it was very hopeful in terms of those projects.
Yeah. To stand up for Nick a little bit, I launched him a couple weeks ago, and he was pretty clear that he had already soured on Ethereum by DevCon in 2016. So
Okay.
unintentional to have inspired all of this. But so it's interesting, and so this was happening all over the world. But I think especially the interest in Asia kind of picked up rapidly, and there's more action out there than anywhere else. What are the factors that you think kind of led to that? And the kind of people who had started out in Bitcoin and were out in Asia, did you see a difference in how they started to kind of react to this phenomenon versus kind of Bitcoiners in the West? Now, you straddle a little bit between Canada and Asia. So do you have any perspective on that?
I think it's a huge difference, right? I think most of the people in Bitcoin in the West are very much fundamentals driven, as in they believe in sort of Bitcoin as an optimal sort of financial system, and it's all very philosophical, and there's a lot of thought leadership, I'd say, in the West. I think the main difference is that in Asia, generally, people who are interested in Bitcoin are a bit more practical, right? So, Bitcoin in Asia really took off as, for example, in China and in Korea, as a way to get money out of a very closed off financial system. Of course, it's a very interesting thing where you can just buy these tokens or basically digital currencies that you can then move to anywhere in the world and sell into fiat without going through any sort of KYC. And that was definitely attractive when, for an average Chinese person, they're limited to, I think, less than $100,000 a year in outward remittances.
Yeah.
So if you wanted to move a lot of money, it takes a long time. Same with Korea, which has a very very strict sort of financial controls around the yuan. So then, practically speaking, Bitcoin was a pretty good solution at that time for a lot of people who wanted to move money offshore. And later on, when it really started taking off, then it became, a pretty optimal instrument to speculate on, right? So just to put it frankly, people in Asia love to gamble in general. It's a big generalization, but actually, it's mostly true. So then, having something like Bitcoin or even later on other cryptocurrency tokens, there's really impossible to determine the fundamental value at any point in time. It makes it really good speculative instrument. So there's a couple components. I think it's one is as a practical sort of tool for financial flows, and the other is just the pure attraction of speculation, and that's sort of the sort of main mindset in Asia versus the philosophical fundamentals oriented vision.
Interesting. I think that's good context for how kind of the original thinking is a little bit different. Okay, so y'all have a syndicate. After a little bit, you organize a little bit more into a fund, and you're active in this kind of cycle bubble through 2017 and 18. That kind of phase has been talked about a lot. Can you, as someone who first heard about Bitcoin and then is getting into the industry during this cycle, can you talk about how you're thinking about these tokens and these kind of ICOs versus Bitcoin at that kind of peak euphoria of the ICO market, and then take us through how how that thought process has changed in the downturn and up through maybe kind of the bottoming out in December of last year.
It's a pretty interesting evolution. I think it's something that a lot of people within sort of the crypto investment community went through in between the peak and the trough. I mean, it comes down to, back in, I think, December 17, early 2018, there was just a sense of euphoria when, every single ICO would pop like 5 to 10x overnight, and all sorts of really awful shit coins were just going up 100% a day. It's when something like that happens, I think psychologically most people just try to rationalize it, right? So you look at something that had an ICO raised $20 million, promised to decentralize decentralize the hotel market and basically take over the entire market share of Amazon, of Expedia and Agoda and all these booking sites
because of the token.
And you sort of start believing in it because it keeps going up, right? It's just human nature. So then the interesting thing, though, I think at that time is that while the finance people and the sort of investors were the ones that are promising the moon with sort of blockchain tech and the entire sort of decentralization of everything there is on the internet, it was actually more the tech people that seemed to be more hesitant, because I think, like, for the most part, if you're a deep sort of Bitcoin researcher / someone who's been doing theoretical work on blockchains for a long time, you kind of realize the limitations of blockchains, right? And for the most part, I mean, if you put it simply, it is just a ledger. I mean, it's basically something that you can put into a database, but it's different from a traditional database because you have copies of the same database in every single basically on that every single user has, and it gets updated by itself almost. So then what you have is just a very inefficient database, and sort of the tech people sort of realized that as a very inefficient database, it's hard to put it into use for a lot of the applications that the investment community were touting. So a lot of us should have probably kind of came back to earth earlier than we did. But that was the mentality at the time. Anything was possible. Smart contracts, basically most exciting invention of the 21st century, et cetera.
Yeah.
That was, and then later on, when we all sort of realized, the tech just isn't there for a lot of these applications, at least for a lot of sort of the supposed Web 3.0 stack that's supposed to be implemented through blockchains, it just didn't make very much sense. And that sort of also led to the collapse of the ICO boom and shitcoins in general later in 2018. Now the view has very much shifted, right? If you look at sort of the themes over the last 2 years, it went from decentralize everything to maybe just financial use cases such as DeFi, which are an interesting use case, to at an extreme, people sort of have given up on sort of blockchains. They think it's not really worth anything other than in the use case of Bitcoin itself. That's sort of the spectrum that we see now of all the super excited people who were all about blockchains back in 2017.
Yeah, let's break up those people and talk about how a couple of groups are seeing it now. So you have these companies or foundations or whatever you want to call them that raised tons of money in ETH during that time. Still have treasuries, depending on how they manage their treasuries the last couple of years. And you're in touch with a lot of these folks. How are they specifically in Asia thinking about those treasuries versus their own token? Is there much of that kind of second group of people who are thinking, hey, there's really no use for this outside of Bitcoin's application? Is that a common thread among the companies that or is there still a lot of kind of fervor within the companies themselves?
Well, I mean, that's the thing, right? And they've already raised the money, right? So they have large treasuries from the token raises 2017, 18. So for the most part, a lot of companies, even if the use case that they had promised really doesn't make sense after the fact, they still have to rationalize their existence, right? So, you can't blame them. The Ethereum community, for example, is all about Buildle, BUILD, or no, is that CZ's thing?
BUIDL.
But but the thing is, like, you can build anything, right? Like, I can just go out back in the yard and start building, a rocket ship, right? But that doesn't mean it's a good idea. So, I mean, there's this mentality out there right now where a lot of companies have raised a lot of money based off promises in the last couple of years, and they're going to execute that vision whether anyone likes it or not, because they have to raise that money, so I guess they're gonna do it.
Mm-hmm.
But then with in a year or two, we'll probably just see that a lot of it was a waste of resources. They might have built a really nice product aesthetically, or even just like something that's really cool, but it's not going to be useful to anyone.
Yeah.
So I think that's probably where we're gonna head towards. But treasury wise, a lot of companies have been affected by the downturn, because as you know, most of the projects, ICO projects, raised in ETH, and ETH has obviously had a massive drawdown since its peak. And people who are raising money for these projects think like the rest of us, which is to say they got pretty excited when ETH price was going up, so they didn't really want to sell, and eventually they held until it wasn't worth as much anymore, and so their treasury is a lot less than what they started with. That's just the situation there is, and as a result, a lot of the 17 ICO projects have actually shut down, and people like to call them scams, but they're not scams. They're not actually taking your money and buying Lambos with it. They basically lost a lot of those funds from just the market drawdowns. Mm-hmm. And the rest of the funds they spent on their R&D, and they did what they could in terms of they delivering what they promised. It's just an issue of what they promised, or what they delivered is not actually that useful. That's what sort of happened to a lot of the ICO projects.
Yeah. So how was through that process your investment thesis? How are you thinking about Bitcoin versus these other things today?
Yeah, I mean, I think Bitcoin's use case has more or less stayed intact for the last however many years, because I mean, as a store of value, you don't really need to be useful for anything really, other than having society recognize the mechanism behind the Bitcoin's existence as something that's worthy of that's worthy as a store of value, right? So it's kind of circular, but it's basically why do people find gold valuable? I mean, gold itself is not that useful to anyone. I mean, yeah, there are some industrial use cases, but that's a tiny fraction of the value of gold.
Yeah. You mentioned previously kind of how people were thinking about Bitcoin as with the use case of, hey, getting capital controls in China and Korea and other places in Asia. Are you still seeing that in practice very much today, or is it kind of more moving towards hey, think about the fundamentals as it relates to kind of the reason for having it?
No, I mean, to be honest, I mean, I don't think these days, Bitcoin is the best solution for a Chinese person to move money offshore, right? Mm-hmm. I mean, if anything, Tether is probably the best, instrument, because Tether just maintains its value, and it's just as liquid as Bitcoin for the most part. And if you're trying to buy or sell it. So then I think it's more at the moment, it is people who believe that Bitcoin has a role in the future future financial system, whether as almost replacing gold, or just taking some market position from gold itself.
Yeah,
I think generally that's the most commonly held investment thesis in Bitcoin. Sure. And the other is just as speculation, right? I mean, it's the dynamics of Bitcoin is that the supply is very much fixed, and the price action is mostly determined by the buy side, right? So that means it's more volatile than a lot of different other instruments. Mm-hmm. I mean, for example, if you're just talking about gold, there's tons of gold stored in vaults all over the world. So if and also there's enough gold that's not been mined, where if you mine all of that, then the current price of gold will go down a lot, and people don't really know how much there's left to mine. Mm-hmm. And eventually we might launch rocket ships to different places where there's more gold than there is on Earth. And
coming soon.
And then what, right? So it's, I think in terms of having a sense of the dynamics, there's a level of certainty in Bitcoin that's not there for any other kind of potential source of value.
Yeah, it's amazing. Take us through the business ecosystem, I guess, in Asia a little bit now. We kind of talked about how, a lot of these groups that raise money aren't finding traction with their businesses. What is working out in Asia right now? And is there kind of a thread through that of a Bitcoin focus, or what's working in Asia at this point?
Yeah, I mean, I think again, it has to do with like themes, right? So we've had a number of different themes that have gone in and out of the public consciousness in the last couple of years, and I think the current theme the current themes are a few things. One is sort of we've talked about Bitcoin as a store of value. So, there's a number of family offices who are interested in having some exposure to mm-hmm. Bitcoin in this region. There's a tiny amount of, their net worth put into Bitcoin as a sort of non-correlated asset, essentially, from their existing portfolio. A lot of the sort of richer families and individuals in Asia have their assets in real estate, right? So it's more of a cultural thing. People generally have more faith in owning a piece of land or property than other asset classes in this region.
Yeah. So these family offices that are you're kind of going through the investment or speculation aspect of what's happening there. How are they? What's the most common route for them getting exposure? Are they buying OTC? Are they have people internally who kind of become competent at this and manage it themselves? Are they investing in funds? What are you seeing as the main avenue there?
Yeah, I mean, first of all, it's it's still a very small fraction of, I think, wealthy families are interested in Bitcoin. Mm-hmm. But for those that do, I mean, a lot of them are just buying it for themselves. I mean, they don't necessarily. I mean, it's next to impossible for a proper or traditional kind of fund to be buying Bitcoin because of all the custody and all the other issues that exist today. So a lot of very often it's basically, as a private individual, they'll be buying Bitcoin. It could be OTC, could be just getting someone they know to buy for them on exchange or whatnot. It doesn't really matter, but it's mostly sort of more personal interest as opposed to institutional interest.
Okay. You got kind of two other things there, OTC and exchanges, I guess two things that are still existing and thriving in Asia at this point. Anything, I guess, any thoughts on the competitive landscape there, kind of the OTC or exchange marketplace?
Yeah, I mean, it is quite competitive. So, we talked about Bitcoin as store of value, and then we talked about, the potential, use cases in terms of DeFi and that sort of thing. I think another really important use case that, that's proven today is that just, purely just like the value of speculation, right?
Yeah.
I mean, so then, exchanges and OTC desks are obviously, essential to facilitate that. So we're seeing, obviously, traditionally, most of the bigger, crypto exchanges have been based out of Asia, and sort of, we all see what's happened in the U.S. with kind of regulatory landscape with regarding to these exchanges. So, so Asia is obviously a lot more attractive as the home base for them.
Yeah.
And then besides that,
on that note, any insight into the Poloniex offshoring? Are there investors involved in that?
That was there was a terrible deal by Circle, obviously. I think, it makes sense, right? If you think about it, it's obviously a lot easier to run an exchange when there are no regulations, right? If you're like a Poloniex or Bittrex competing against Binance and CZ, who can move wherever he wants and set things up, without any delays whatsoever from regulators, you're not going to be able to be competitive, right? So it doesn't make sense, that Poloniex is not doing so well. But I think they're whoever buys it out in the end. I'm assuming it is an Asia consortium, because there have been rumors of Justin Sun being involved. I think if they can just relocate that to Asia, there's still a lot of value there, because it's such a important name in crypto, right? Poloniex has been there forever, and there's value in that brand.
It'll be interesting to see if the brand really does have kind of staying value there. I kind of interrupted you there. I guess maybe continue on your previous thread.
Yeah, So I was saying, in terms of value of speculation, just think about, what are the best sectors that help facilitate speculation. One is, traditional exchanges, OTC desks, which are, just extensions of exchanges, essentially. And then another
quick question on that there. Exchanges with OTC desks. It kind of seems like to me a little bit that there's a little bit more kind of more private OTC operations have had more success out in Asia than they have in the West, where they do tend to be tied to exchanges. Any thought on that, or is that will there be kind of is the long-term kind of trend there more just convergence to large exchanges operating the biggest desks also?
Yeah, first of all, in terms of OTC volume, what we consider is OTC volume is pretty much exchange volume, which is to say that when you place a large order on a OTC desk, what they actually do is just trade it on the exchanges. Except they have better liquidity than private individuals, because they have they're really good arrangements with all the different exchanges, and they can just go wherever there's the best sort of volume. Sorry. So then whatever OTC traffic is done is pretty much reflected on exchanges anyway at the end of the day. So then it doesn't. I don't think it's a it's that big of a deal. And I think in terms of the OTC desks themselves, I think there's definitely a lot more volume in Asia, just because there are a lot more miners based in China, obviously, and miners are probably some of the biggest traders or users of OTC desks in the first place.
Also on the speculation side, we got BitMEX there in Hong Kong. You've seen maybe a little bit of more competition rising for them based out of Hong Kong or the region also. Any comments?
Yeah, that's right. Yeah, I mean, there's very few platform tokens that have done well recently, other than those of sort of these margin trading exchanges, right? So there's been a number of competitors to BitMEX that have popped up in the last year. Actually, quite a few in Hong Kong itself, where I'm based. So FTX, which was started March of this year by Alameda Research. They're one of the biggest existing kind of traders or market makers in crypto. And CoinFlex, which was also based out of Hong Kong, and they're an extension of an existing UK exchange called CoinFloor. And actually, these guys are taking quite a lot of volume these days from BitMEX, just because BitMEX itself is actually becoming a lot more conservative than before in terms of their approach to KYC, and banning certain jurisdictions from using BitMEX. And so then there's a lot of market share there. There's a big market for these competitors because speculation is such a big component of cryptocurrency in general. I think going forward, you're going to see a lot of these new platforms really having substantial traffic. We're already seeing FTX and CoinFlex jumping in sort of the top 5 exchanges by volume. And I think BitMEX itself on the tech side is having a lot of issue coping with the huge amount of volumes it gets. So that in turn frustrates traders who are unable to trade when there's a lot of volatility, and that's actually a win you want to be trading, because that's when most traders make most of their profits. Yeah,
I think that's certainly something to keep an eye on, is that kind of battle out there. Well, this is great, Jack. Thanks for all the perspective on what's happening in Asia and taking us through the kind of progression of your thinking on Bitcoin. We'll need to catch up again when we have more time on thoughts on current state. But I appreciate you joining.
Sure. Thanks, John.
All right, man. Enjoy Shandong this week.
Yeah, I will. As long as I can actually go outside, because at the moment the air quality index is over 200, so it's
yikes.
I'm pretty much stuck indoors at the moment.
We've got this Bitcoin miners already moving up to the north now, moving up from Chengdu, already rocking and rolling.
Yeah. I mean, that's the other thing. I'm not sure that's going to be great for the quality of air here, and quality of air as well. But anyway, it's a bit of a trade-off.
All right, man. Good talking. Talk later.
All right. Thanks, John. Bye-bye.
A quick reminder, all of the content in this episode is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained in this presentation constitutes a solicitation, recommendation, endorsement, or offer by BTC Media, the Let's Talk Bitcoin podcast network, or any third-party service provider to buy or sell any securities or other financial instruments.